Good afternoon, Blue Line traders. I'm Sean, the owner of Blue Line Trading, and this is your daily market update for January 26th of 2023. Yesterday, you probably noticed that there was no video, and there also wasn't a morning update this morning, and that's because nothing really changed. The market was following our forecast and all the information that we put out in the previous video, which means that there wasn't really a need to put out another video. Now, also, on top of that, I want to make sure that I'm always giving you guys the best highest quality content that I can. And for me to do that, sometimes I do need to take a day off to regroup. And that's what I did yesterday. Let's move into the update. Starting with the market overview, we are starting on the S&P futures chart on a 15-minute time frame. And I've got your close from yesterday marked right here. When we follow the median line in red, you'll notice that the overnight session was 100% net long. And we did see conviction to the upside. Now that conviction was somewhat weak. And what I mean by that is the first attempt we got rejected. Then we came back almost to the median line and then went for a second attempt, which was successful. We got a back test and then buyers went in for a new high. They saw a rejection of higher prices and then fell back within the range of yesterday. Now from this point, they made another attempt into the open, and this one somewhat held as we came up, back tested, and then went for another high. And this high was the overnight high. You'll also notice that the opening print was the low of the session and the closing print was the high of the session, which is pretty bullish. Now, because the conviction to the upside was somewhat weak, we did see a median correction even though there was conviction. On the opening print, we came down in a ABC three-wave movement and back tested the median line. From this low, we saw buyers again get aggressive and they put in a new high that took out the overnight high, and we closed in the upper range of today's session. The big question of the day is going to be, if you remember the last video that we put out, we said look up at 4,200 in that zone for the next target. The question is going to be, is that still the case? And then if it is, once we get there, what should we be looking for to come next? And to answer that, we're going to look at all the evidence that's available to us. Starting with the price action, and we will start with the overnight price action, which is in this green box, and it's going to be bullish. The first reason it is bullish is you'll see that the opening print was the low and the closing print was the high, which is the definition of an uptrend, and that is bullish. The other reason is because after we got the pullback, which we anticipated to around the 39.60 to 39.70 zone, which started right here, we had this rally begin. And this rally led into last night's overnight session, and the last low was not taken out, and this was basically continuation of that rally. Moving into the daily session price action, it is also bullish. The reason it is bullish is off of the overnight high, we came down, and this low that they put in did not take out the previous low. And then from that point, we saw continuation to the upside in the form of a new high. That again is bullish and would suggest that this trend is still going. Coming down to the intraday volume, you'll notice that it is denser with buying pressure, which tells us that buyers had good intraday control today, and they showed that in the price action. Pulling up the session-based volume profile, you'll notice that we have a higher point of control and higher value area, with the profile shape being an uppercase D. Uppercase D shaped volume profiles, which suggest, when combined with the fact that there's more buying in here, that continuation is most likely the scenario that we will see from here. Moving into the daily time frame, to look at our daily candlestick location and structure, the location is bullish. And the reason the location is bullish is I want to draw a very clear resistance line right here. So when we look at this, you'll see that this acted as resistance. Then we came down, rejected that area, and then went for another attempt. And this time we got above it, back tested that area, and now we're breaking out. So that is why the location of this candle is bullish. We can treat it as a resistance, become support, breakout. The structure of this candle is also bullish. And the reason it is bullish is you now have support right here. And off of this support, we have a bullish engulfing candlestick, which would suggest that buyers are in control and they want to take this market higher. Coming down to the volume is a little bit lower than I would like to see, but you have to remember that this is confirming that whatever we are seeing to the upside right now is overall a corrective structure, and when this completes, we should be looking down at new lows. And what I mean by that is we have this base in here, and you can see that in the center of this base, volume did increase. That has to do with positioning to the upside. But once that positioning was done and we broke out, look what happens. We're seeing volume taper off, which tells us that declining volume is most likely a corrective structure. And when this is done, we should see increasing volume to the downside, which would breach the last low, breach the previous October low, and go to new lows in the market for the final leg down in this correction on a larger degree. Moving over to the market internals, starting with the VOLD, buyers did have good intraday control, but they did not break the benchmark. Following our theme of volume dictating where the market's going to go, you can see that there is somewhat of a shift. We came towards the sellers and that pullback to 39.60, and now off of 39.60, we are seeing a shift back in strength towards the buyers. Coming down to the ADD, you'll see that we opened in extreme positive territory, which tells us that the market was out of balance to the upside. And then upon opening, we had this sharp median correction, which was pretty much immediate at the open and brought us down towards the zero line. We then climbed from there. Now we did have slight weakness into the close, and what I mean by that is you can see that the closing price on the SPY was the intraday high. On the ADD, we did not break the opening print, which does show a little bit of weakness, but not enough to concern me as far as follow through goes just yet. Coming up to the tick does favor the buyers as most of the activity is up top, and you can see that off of the low, same thing with the VOLD, buyers are building strong cumulative strength in their direction, and this is showing a shift up towards the buyers. Now it did kind of peak off just a little bit today, which means that we could be pulling back for a corrective wave, because remember, the market does not move in straight lines. But as of right now, I'm not seeing a shift all the way back towards sellers. Coming up to the S&P sectors, you'll notice that almost everything is green and risk on is leading to the upside, which tells us that there is most likely some continuation in the tank for the buyers. When we combine all the evidence that's available to us, it's pretty clear that after we saw that pullback towards the 39.60 to 39.70 zone, the reversal off of that zone and the price action to the upside is not only strong, but buyers have good control, and we're likely to see follow through from today's price action, which tells us that the ABC theory, which is the theory that's on the chart right now, is a lot less likely. And it's a lot less likely because, one, the lower degree 1 and 2 waves, we've already exceeded the 786 retracement and had a close above it now, a close that's substantially above it, which would tell us that a 100% retracement is more likely. The other thing is we have the larger degree 1 and 2 waves, and we're quickly approaching the 786 retracement of that, which would again tell us that this is a lot less likely. Now it's still possible, but I'm thinking that our other theory is much more possible at this point. Now, as far as targets go for this move upwards off of the 39.70 to 39.60 zone, I want to go over to a cleaner chart. So we're going to go back over to our daily chart and remove all the drawings. And then I want to show you a few measurements. Off of the December low, which in this theory would suggest that this is your first wave coming up, and then we have this pullback. And when we measure that, the 161.8 extension is right around 4,300. Now that would be all of this wave, but we should be looking, because we have a 1-2, 1-2 setup here, we should be looking for wave 3 of 3, which would bring us to around the 127 extension if you're measuring it off of your greater degree 1 and 2. Now we can also measure this from this scale and look for the 161.8 extension. And when we do that, it lines up pretty closely with the 127.8 61.2 extension. So we should be looking up right around above 4,200, specifically around 4,214. That would be our next target. Now I would not wait all the way to that target because the structure coming up is corrective. So any reversals are likely to be more explosive, especially as we get higher. So I think 4,200 is a very safe place to take your trade off, especially because we'll start seeing divergences in the market get pretty strong at that point. Now to answer the next part of the question, what should we see after we hit this target? Well, we should see a pullback for wave 4 of wave 2. And to measure that, we're going to come off of our bottom and come up to this target right here, and the 382 is right here at around 4,100. So what we should be looking for, and as far as a movement goes, is you have your 1, 2, we're putting in 3 right now, and we should see 4 come in and pull back towards exactly a more accurate target would be around 40.90. From there, we should come up and hit somewhere around the 61.8 extension, and I'll show you that right now. So to get that, we'll measure off of the bottom of wave 2 to the top of our suspected wave 3, and then our pullback to the 382, and that puts it right around 42.51. And that is the entire wave 3 of this pattern. Now keep in mind that we can go as low as 40.50 for wave 4, and that will change the top target. Now after we complete this entire wave 3, we should be looking for another pullback. And when we measure with a retracement off of our bottom to our suspected top of wave 3, we should see another pullback right around 40.70. Now from that point, we should be looking up again at the 61.8 extension. So we go to the bottom of 3, push up, complete 3, come back down to the 40.70 area, and that should put our final target right around 4,300, and will look something similar to this. We should see an ABC to the downside, and then 5 waves coming up. That terminates in the 4,300 zone. Now it can go higher, especially if we get an extended wave, but ultimately that's where we're looking up. Now keep in mind, this is measured as if we're counting this as 5 waves, 3 down, and 5 waves up. There is another potential here where this again is a WXY and not an ABC coming up. Both are 3-wave movements, but they change a little bit in their structure. And the easiest way to measure that, if this is 3-wave movements within each other, is to measure the 100% extension of these, come up, and the target is a little bit higher. It's around 44.66, as high as probably 4,500. That's where we should see the most resistance. The last thing we'll do today is go over the watch list tickers, and we're going to start with NVIDIA. We are in a bullish position in NVIDIA. That position's up about $7,000, and we've broken out. We've gotten a potential back test right here and then gone for a run, and we are in this volume gap on the profile, and our direction is up with a target around 220. Now today we printed this indecision type candlestick, and there is a potential that I think we could see another pullback tomorrow. Possibly a back test if things get more bearish, or just a pullback to around 192. Now the reason I'm saying that is, one, we have again an indecision candlestick, and when we look at the RSI on the daily, we are in overbought territory. The 8 EMA is pretty far away, and today we rejected the top Bollinger Band with an indecision type candle. As far as the market diary on a bigger scale, the market as a whole, there is a positive delta for tomorrow's expiration, which means that to remain delta neutral, dealers have been shorting the market, and tomorrow when these roll off, they're going to have to buy. But things are the opposite for NVIDIA. When we pull up NVIDIA's dealer inventory, they are currently holding a lot of bearish positions, which means that they are short calls or long puts. And the reason why that is the case is because retail is really bullish on NVIDIA. The problem with that is, as they've been selling these positions, these bullish positions to retail, they've been buying to cover their delta and remain delta neutral. Tomorrow, when all these positions roll off, they're going to have to sell to remain delta neutral, which means that we could see some selling pressure in NVIDIA tomorrow. And when we look at the dark pool levels, we're up at 398 right now. That's where we're closing today. And the next support, as far as dark pool is concerned, is right around 192.34. And when we look at the chart, we have support in that area. So it would make sense to see a pullback tomorrow with all those positions coming off to around right here. Now, as far as our position is concerned, we have to make a decision, because the pullback is going to hit those calls a little bit. But if the pullback is only to 192, I'm willing to hold those, take a little bit of drawdown, because ultimately the direction is up. Now, if we break 192 and come down into this zone right here where we see this dense price action and come down, and it looks like we're going to come down below 190, those calls are going to go red for sure. And if we wait, the damage is already done, and then we're giving back a lot of profits. So we have to make a decision tomorrow morning about how things are looking volume-wise at the open. Should we take our profits and run and then try to get back in on the pullback? Or are we going to take the chance and hope that the pullback is only to 192-ish, and then it's going to go from there? Next on the list is Tesla. And you will see that after earnings yesterday, we got kind of a muted reaction into earnings, and then we gapped up today. And we are currently at around 160. Now, would I short this just yet? No. And the reason why is we are so close to this target, we have not determined what will happen at this target. You short it now and we blow past it, you're going to be hurting. So what we want to do is wait till we get up to around 166 and see what this wants to do. If we reject this area, I'm probably going to start looking at going short. I probably want to see somewhat of a reaction before I make a move, but this is definitely a top fishing zone, and we should start paying attention once we get to it. Next on the list is Microsoft, and Microsoft just had earnings, and it doesn't show the earnings reaction because we're on the daily. I'm going to pull up the 4 hour so you can see it. And ultimately what happened was we had an ABC, I believe, to the upside. We forecasted it pretty accurately. Here's your reaction right here. We actually day traded this in the after hours. I shorted off of here and it covered right around, I believe it was somewhere in this bar right here. But it was a pretty good forecast of what was going to play out. And now today we did climb back off of our low right here, and we're pushing back up. And on the daily, someone might argue that this is pretty bullish because it looks like we're breaking out. But look at the volume. The volume is very low. I think what might be a possibility here is when we come back to the 4 hour, we might be coming back to backtest this area. We hit the 100% extension. If we don't break it, that's another top fishing opportunity right here, and that could be the top right there. And we're just backtesting that zone. So keep an eye on Microsoft. There might be a short trade come in here, or if we break it, then we should be looking at the 1618 extension, and you can trade into momentum, but I would not hold that over the weekend. Last, we'll look at Netflix. I'm not too interested in Netflix, as I mentioned in the previous video that we put out, just because we blew so far past the target. But I am seeing potential weakness here. I wouldn't say this is a dark cloud cover just yet, but look at the volume. We had a pull down to about the midpoint of the previous session. So this could be a back test of this zone right here, or it could be that we're seeing signs of weakness and we're too extended. There is some room up here on the Bollinger Band though, so there's a lot of unknowns here. I'm not too interested in trading this though. But that's pretty much all I got for you guys today. If you guys have got any tickers you want gone over in the watch list or over the weekend, let me know and I will take a look at them. Keep an eye out for the watch list over the weekend, and remember there's no video tomorrow, but if things are interesting, I might give you guys an audio update on my way to work in the chat room. All right, see you guys next week.